Most people believe debt is a trap, a chain that binds you to endless payments and financial stress. But what if I told you the world's wealthiest individuals don't just tolerate debt, they master it? They use it as a secret weapon to multiply their fortunes, often paying zero taxes in the process. There are 9 hidden ways they do it, and by the end of this video, you'll understand the math behind their millions. This isn't about getting rich quickly. This is about understanding a fundamental financial principle that separates the financially free from the perpetually struggling. We're going to expose the exact strategies, the hidden math, that allows the ultra-rich to turn liabilities into assets, and how you can start thinking like them. You'll discover how they borrow billions, live lavishly, and often pay less in taxes than their employees. It all comes down to 9 powerful methods. Let's reframe debt. For most, debt is bad because it's used for depreciating assets, cars, vacations, consumer goods. This is bad debt. But for the wealthy, debt is simply rented money. It's a tool, a lever. The key is the spread, the difference between what you pay to rent that money and what that money earns for you. If the money you rent earns more than it costs, you're not just rich, you're financially intelligent. And the rich are masters of this arbitrage. They use other people's money to make their own money work harder. First up, a strategy so audacious it sounds like a loophole, the buy, borrow, die method. Here's how it works. The wealthy acquire appreciating assets, think valuable stocks, real estate, or even fine art. Instead of selling these assets when they need cash, which would trigger hefty capital gains taxes, they simply borrow against them. The asset acts as collateral, and the loan provides tax-free liquidity. The magic happens at the end. When the owner passes away, their heirs inherit the asset with a step-up in basis. This means the asset's cost basis is reset to its market value on the date of death, effectively wiping out decades of accumulated capital gains tax for the heirs. They can then sell the asset, pay off the loan, and keep the remaining wealth, all without paying a dime in capital gains. It's a perfectly legal, generational wealth transfer mechanism. Next, we have securities-backed lines of credit, or SBLOCs. Imagine you have a portfolio of high-value stocks. Instead of selling those stocks to fund a new venture or a lavish purchase, you can get a line of credit from your brokerage using your portfolio as collateral. You can typically borrow up to 50 to 70% of your portfolio's value at incredibly low interest rates. This gives you immediate, tax-free cash without selling your assets. You maintain ownership, continue to benefit from any appreciation, and avoid capital gains taxes. This is the exact strategy Elon Musk famously used to help fund his acquisition of Twitter, leveraging his Tesla shares without selling them. It's a powerful way to access liquidity while keeping your wealth invested and growing. For real estate moguls, the BRRRR strategy is a cornerstone of wealth creation. It stands for buy, rehab, rent, refinance, repeat. You purchase a distressed property, often below market value. You then invest in renovations, forcing its value up. Once it's renovated, you rent it out, generating cash flow. The crucial step is the refinance. With the property's increased value and a steady rental income, you can get a new loan, often a cash-out refinance. That allows you to pull out your initial investment and sometimes even more. This means you can own a cash-flowing asset with literally zero of your own money still in the deal, ready to repeat the process with another property. It's a powerful way to scale a real estate portfolio rapidly. But what about the truly massive deals? The ones that reshape industries and create multi-billion-dollar fortunes? How do the titans of finance acquire entire companies using almost no money of their own? The answer lies in a strategy that's both brilliant and controversial, and it's how private equity firms dominate the corporate landscape. We'll dive into that next, but first, let's look at how even small businesses can use debt to achieve infinite leverage. This is where the big leagues play. Leveraged buyouts, or LBOs. Private equity firms identify undervalued companies with strong cash flow potential. They then acquire these companies using a massive amount of borrowed money, often 70 to 90% of the purchase price. The genius part: the debt is secured by the assets of the target company itself, and the company's future cash flows are used to pay down that debt. The private equity firm puts up very little of its own capital. After a few years of operational improvements, they sell the company for a significant profit, having used other people's money to generate massive returns for their investors. It's a high-stakes game, but incredibly lucrative when played right. You don't need to be a private equity titan to use debt strategically. Even small businesses can employ trade credit arbitrage. Imagine you run a small retail business. Your supplier offers you 60 days to pay for inventory. You order the goods, sell them within 30 days, and collect the cash from your customers. You then use that cash to pay your supplier before the 60-day deadline. In essence, you've used your supplier's money to fund your inventory and generate sales, all without touching your own capital. This is infinite leverage in action. Using someone else's money to make a profit, effectively borrowing at a 0% interest rate for a short period. Now, before you go out and start borrowing against everything you own, a crucial pattern interrupt. These strategies come with significant risks. The wealthy understand these risks intimately. The biggest danger? Margin calls. If the value of your collateralized assets drops significantly, your lender can demand you put up more cash or force the sale of your assets, often at the worst possible time. Another risk is interest rate fluctuations. If the cost of your borrowed money rises above the returns your assets are generating, your spread disappears, and you could quickly find yourself in a losing position. Understanding and mitigating these risks is paramount to playing the debt game successfully. Here's another brilliant, yet often misunderstood strategy: tax-free lifestyle funding through margin loans. Many ultra-wealthy individuals, especially founders and executives, hold vast amounts of their net worth in company stock. Instead of taking a massive salary, which would be taxed at the highest income rates, they often take out personal loans using their company stock as collateral. These loans provide them with tax-free cash to fund their opulent lifestyles, acquire new assets, or make charitable donations. The interest rates on these loans are typically far lower than their marginal income tax rate, making it an incredibly tax-efficient way to access wealth without selling their appreciating assets and triggering capital gains. It's a prime example of how the tax code can be leveraged by those who understand it. A more niche, but equally powerful strategy is life insurance arbitrage, often called infinite banking. This involves using a specific type of whole life insurance policy that builds significant cash value over time. The wealthy can then borrow against this cash value. The key advantage is that the policy's cash value continues to grow uninterrupted, as if the loan never happened. Meanwhile, the borrowed funds can be invested elsewhere, potentially generating returns that exceed the loan's interest rate. It's a way to create a private, tax-advantaged banking system for yourself, allowing for continuous growth and access to capital simultaneously. For those with a higher risk tolerance, currency and forex leverage offer immense potential. The foreign exchange market is the largest and most liquid market in the world. Traders can use extreme leverage, sometimes up to 100-to-1, to bet on the fluctuations between different currencies. This means a small amount of capital can control a massive position. While incredibly risky, successful forex traders can generate astronomical returns. The legendary investor George Soros famously broke the Bank of England by shorting the British pound with massive leverage, netting over $1 billion in a single trade. It's a testament to the power of debt as a tool for speculation, but one that requires deep market understanding and a strong stomach. Finally, we have short selling, a strategy that allows the wealthy to profit when assets decline in value. Instead of buying low and selling high, short sellers borrow shares of a company they believe is overvalued and will fall. They immediately sell those borrowed shares on the open market. If their prediction is correct and the stock price drops, they then buy back the same number of shares at the lower price, return them to the lender, and pocket the difference. It's a way to make money in a bear market, but it comes with theoretically unlimited risk, as a stock's price can rise indefinitely. It's a sophisticated play, often used by hedge funds, to capitalize on market inefficiencies and downturns. So, there you have it. 9 powerful ways the rich use debt not as a burden, but as a strategic financial instrument. From avoiding taxes with buy, borrow, die to amplifying returns with SBLOCs and LBOs, the common thread is clear. They understand that debt, when used to acquire income-producing or appreciating assets, can be a catalyst for immense wealth. They focus on the spread, ensuring the returns generated by the borrowed money always exceed the cost of borrowing. It's not about being debt-free. It's about being strategically indebted, using other people's money to build your own empire. Now you know the secrets. The question is, how will you apply this knowledge? If you found this breakdown insightful, hit that like button, subscribe for more deep dives into the mechanics of wealth, and let me know in the comments which of these strategies surprised you the most. And if you want to learn how to implement these strategies in your own life, check out our next video where we break down the step-by-step guide to building your own infinite banking system. Don't just watch the rich get richer, understand how they do it and start building your own financial legacy.